Good afternoon, everybody. This is Sid Shamim, your host. This is our series of bi weekly, weekly, or even three times in a week where we do a legacy and impact. We try to bring people who have made their faith change their destiny and people who are doing awesome job in this market as a business owner, as an entrepreneur, or even in a commercial real estate. Today, I've got Michael Manina. I know I'm not saying his last name correctly, but I've always referred him Michael. Me and Michael, we just started talking 10 minutes early before this podcast. We've never met with each other. He's not getting paid to come and speak for himself, or I'm not getting paid to bring him here. This goal is just Michael is to tell our audience what you do, who you are, and really somebody who is trying to be Michael and who have no idea what he should be doing. Maybe your story can connect with him and help them to be somebody like you. So without further delay, Michael, can you please share who you are with our audience? What do you do? What was your last 5, 10, 15 years look like in your life?
I got a little bit longer than that. Thank you very much for the intro. I really do appreciate that. I'm Michael Menino with Arc Investment Ventures and American Craftsman Homes. I've been a builder for, oh my gosh, I'm gonna have to check my numbers. Got my builder's license in 1989. Now, if anybody in there is younger than that, I think I've been building longer than most people have been alive. House flipping in 2008. We'll talk about that for a little bit because in 2008, the market made me become a flipper, and I absolutely love flipping. Better, faster, and easier than building. And I founded Arc Investment in 2022, and all we do is show people how to make money in multifamily investing.
Yeah.
And it's better, faster, and easier than anything I've seen so far. But I've been investing in multifamily for about, I don't know, 7 years now. I'm sure once you've done it, you don't want to go anywhere else.
Absolutely. Michael, you said you were building in 2008. Tell us
Mhm.
a little bit more. What was that felt like to be in that business in 2008 where the recession was the main course?
So when I was in it, I was terrified. So a lot of investors, they tell their hardship story, which is great. I want people to be honest. And a friend of mine lost $50 million in 2008, 9, and 10.
You
And
say
I
50
lost
million?
50 million. Lost 50 million. I know a bunch of people lost tons of millions. And I lost $6,000 at that time. And I was losing my mind because I don't like losing. As you can tell by the trophies, I'm a very competitive individual. And back then, I was mad I lost $6,000, and everybody else is like, just shut up. And what I learned at that time is the greatest opportunity is when there's blood in the street. When there's blood in the streets and people are just bleeding out, if you could learn the skill of syndication, it'll blow your mind. It will really blow your mind. I can tell you a cute little story how $4 million because I wasn't ready for it.
Hmm.
So I was a flipper and we were looking for single family houses to flip, and there was a tax sale in Oakland County, Michigan. And what we did was we went there and we're listening, we had 3 or 4 houses we wanted to bid on, and I wasn't even paying attention. And they said units 106 to 108 to 208. And I was like, that's 102 unit lots, right? Lots in a very nice area. What's the secret of real estate? Location, location, location. Very nice area. Back then, 08 and 9, nobody was buying anything. And people were just giving. I was at one of my cousin's office when he was giving the lots back to the developer. And so I was listening to it, and they said, there's 102 lots, 102 lots, $200,000. And I looked around, I'm like, who's going to buy this? Because I brought enough for a single family house, not the lots.
Yeah.
And if you don't have the money in a tax bill that minute, you can't bid on it. If you bid on it and you don't have the money, or it takes a day or two, they'll pull your number. And you can never go to the auction again.
Yeah.
And they go 200,000 going once, 200,000 going twice. And I'm like looking around like, why isn't anybody bidding on this? And then it said 2,000 going third time, not sold. And it blew my mind because I didn't know the power of syndication. What we do is we bring people together to
Yeah.
do something bigger than we can do by ourselves. Right. And, if you were to just buy those lots for $2,000 a piece, wait 3 years, you would have sold them for $30,000, $40,000 a piece.
Probably
Right?
more. Yeah.
Probably more. And that's being conservative.
Yeah.
That was being super conservative. But I wasn't ready for it. I didn't realize it was up. But the one thing I learned is there's opportunities out there. And when times are tough, that's the best time to capitalize.
Michael, what was that year that this 102 or 104 lots that the examples you gave?
2009.
Wow. Yes. That was your journey in the call it next to the Great Recession, 2008, 2009.
Uh,
I lost some money on the market and stock exchange and wasn't happy about that. What did you
Nobody's happy about the loss.
Well, like you said, depending on how big of your loss, if your loss is smaller than the other guy, he's gonna laugh at you. But you're right. We all lived through that. I started fixing, buying and holding and fixing and flipping starting 2010. Really, that was my early start of the career. But I'm
But
interested in knowing you went through that journey. What was the pivoting point where you either got back to your construction work or construction projects? How did that look like after 2009 or 2010 for you?
so it was someone said it best. Find a need and fill it, right? And back then in 2008 and 9, there was no jobs going on. We found out through the Builders Association that there was 5 permits being pulled in Michigan, 5 new home construction permits,
That's it.
right? How many people are bidding on that?
Yeah.
So a friend of mine comes up to me and goes, "Hey man, you want a house? Like, I got some guys, some really good guys. I want to keep them busy." And I said, "Yeah, sure. Well, how much is it?" He goes, 14,500 cash.
Four. You
Nice
mean
name.
1 4 or 40?
One
Yeah.
4 500, 14,500, right? And I'm thinking to myself, now I'm just keeping my guys busy. Now I've got something to do. I can
Yeah.
keep my guys busy. My plan was to fix it up, put a renter in for 5 years, and then sell it and double my money, right? That was my plan. And then another one popped up. We went to the same tax sale, and I couldn't make it. I sent my wife there. I said, "Honey, if you find something for anywhere under $30,000, just buy it." Here's
Yeah.
one. It's in Oxford. I don't know where it's at, but just take a look at this one. She calls me up. She goes, "I bought it." I'm like, "How much?" 14,500. I go, "Where at?" "Directly across the street from the one we own."
Wow.
I had 2 properties on the same block I had 20% of, what was this at Opal Street in Oxford, Michigan. There's like
Okay.
10 houses and I had 2 of them.
Yeah.
So we just kept them for a few years, and then we got another one, and then I wasn't even really anticipating it, but the rent started putting money back into the account, and I'm like, well, I got to buy another one, and then we bought another one. Then construction picked up, and we started splitting the flips, doing the flips and then
Yeah.
doing the construction.
That's
So
a
my
yeah.
guys would do the construction, and then
Yeah.
when the flip was ready, they'd go to the flip and they come back to the thing. And I kept my guys busy, and they were working during the hard times, so it was a win-win-win situation. And that's
Yeah.
what I'm looking for in business is a win-win situation. Just like you, when you have an asset, the person that's selling the asset has to win. Your investors have to win. You have to win. The people that buy the property after you're done fixing it up, they have to win too.
Yeah. Absolutely. I always say this: you can never make a good deal with a bad person, and you can never have a deal that is only you winning and the other person feeling losing. You gotta leave something on the table, and that is the best definition of a good deal. If you feel like you're leaving something on the table, that's a good indication of a good deal. But your interesting story is very interesting. I want to make sure my audience is understanding it. This is a gentleman who have an immense experience in construction, gone through a tough time in 2008, 2009, realized that it's a power of knowing what you don't know, meaning going to the auction house is not easy. It's not for everybody, to be honest with you. I've been to auction houses and I know it's hard because you're competing with some real sharks at a lower level, but
Well,
still
well,
real
well,
sharks.
are you scared about the sharks? Or are you scared about the inexperienced one that's going to pay more than when they should for the property?
When you know what you're doing, you're not scared about sharks, right? So
Right. There you go.
when you
Good
go for
point.
the first time, you even if you think you know what you know, you are intimidated by all those experienced players in the market, right? And so for my audience to understand, knowing having the knowledge and preparing yourself to do what you can is extremely important, right? Meaning you have your ducks in a row, you're going to the auction office, you even train your wife to go there and then make a transaction like that. This is
Yeah,
awesome.
she was nervous, and when our first, so how do you what combats fear? And fear is probably the number one problem with real estate.
Yeah.
Is fear will steal everything from you if you let it. And the one thing I like saying 1,000 times is I can't believe that in the Bible there's fear it's addressed 365 times.
Wow.
Exact number. I kind of blew my mind when I found that out. And what I did to combat the fear for my wife was the first time that we went to the auction, I brought her with me, and you hold up the paddle, right?
Yeah.
To do
Yeah.
that. Back in the day, now it's online,
Yeah.
but back in the day they
Yeah.
would throw it
Yeah.
up, right? And then me and my son were like, "Yeah, we want this one," So we bid on it. Well, raise the paddle, and she's like this.
Hmm.
And at the end, it's like 106, and she goes, "Should I raise the paddle?" So yeah, raise the paddle. And she raised the paddle, And so she got used to it and comfortable with it, right?
Yeah.
And then when she went back and I couldn't make it, she was comfortable with it.
Yeah.
So what combats fear is knowledge. Doing
Yeah,
it.
absolutely. So you did quite a bit of that. Tell us, when was the transition point for you to be from a fix and flip to construction, now looking into multifamily? How did it look like for you? What was your journey? What year was that you started?
Great question. Thank you. It was like it was like 2019. A wholesaler goes, "Hey man, I got 8 units for 300,000." I'm like, tough to turn that one down, right?
Yeah.
So I looked at it, bought it. And then my son wanted, my son was a partner and he wanted another one. We found another 11 unit that we're selling right now, and that one was trashed. And you understand, I get excited on the when it's
Yeah.
trash.
It's like that's
It's
exactly what I want. Yeah.
trash one in a great neighborhood, like a gift from God.
Yeah.
And we got it 11 units for $375,000. It
And
needed everything though. It needed
yeah.
everything.
Yeah.
I mean, we put new cabinets, countertops, appliances, sinks, faucets, everything. LVP, changed the doors out. Everything was brand new in the units. We even could change the glass on the windows. We didn't change the windows, but the glass on the windows.
So
And
it's
here's
like
another.
30 a door, 30 or 40 a door back in 2019.
No, we paid 12,
You say
12,000 a door, everything.
how many units again?
11.
11. Okay, got it. 300,000.
So 120 something, like 150,000 with the parking lot, and we put 2 new roofs on.
Okay.
So it was done. And here's a good story that I hope helps your listeners when they're dealing with contractors. I want to add value in that
Yeah.
aspect too. So my head contractor, we're flipping houses and flipping apartment complexes. He comes up to me and I said, we told him the price. It was, I'm not going to tell you his name because then it'll beef him out that he didn't know what he was doing.
Yeah.
But we told him $12,000 a unit, material and labor, right? And then we did the appliances.
Yeah.
So he goes, I can't make any money on this. So you can't? He goes, no, I don't think I'm gonna make any money on this. I go, all right, here's what we're gonna do. We're gonna flip it in a week.
Okay.
It changed his mindset to I can't do it to how I'm gonna do it. I already knew how to do it is do it in a week. And I go, okay, we're gonna start on Monday. And the guys were like, what do you think the odds of us doing it in a week? He goes, 90%. The guy, what do you think? 70%. And the other guy said 50% chance. And I noticed the sharper guy was 90 and the negative guy was 50%.
Mm-hmm.
And I said, okay, cool. What are you going to do? Let's start off day one. What are you going to do? He goes, I'm going to check the cabinets. Then what are you going to do? How long is it going to take you? 4 hours. Then what are you going to do? He goes, I'll put the cabinets back in. He goes, good. So that's your one day. What are you going to do? He goes, I'm going to tear out all the floor and the carpet. He goes, what are you going to do? I'm going to tear out the bathroom. What are you going to do the other half of the day? Well, I'm going to start to put the shower together. And then we just started. I asked them to put the power in their hands. What are you going to do Monday at this time? What are you going to do Tuesday? And we scheduled out basically 2 parts a day, half a day here, half a day here, half a day here, half a day here, half a day here. 3 guys. It's all tough. And I said, and they're like, oh, we can't do this. We can't do this. I go, Thursday, what are we going to do? And they looked at me. I go, we're going to paint. They told me what they could do.
Yeah.
They got Thursday and they ran out of work.
Yeah.
Everybody thinks the job is way harder than it actually is going to be.
Yeah.
And then I videotaped it. I got to bring those back up. They're on Facebook. But I asked the guys when we started, what's your odds? You said 50%. What's your odds? 70%. What are your odds? 90%. My odds is 100%. On Friday, I went in there and I said, guys, what do we got left to do? And they're like, we're going home.
It's clean left. Yep.
And then at the end, I said to the contractors walking out, the guy that was running the place, if you can't make $12,000 a week work, I got to find somebody else. I can do it.
Yeah. 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 Awesome.
So that's how
you were able to flip it within less than 3 months, I believe, or you had to go lease it up and sell it.
So we could have flipped it in 3 months easily, but it was during Corona. I think it was 2020 and 21, and we were having such a hard time evictions. Our partners said, "What do you want to do? Do you want to keep the good ones or at that point?" And as bad as that was, we wanted to get rid of everybody and put everybody new in, even the good ones, which was probably not a great idea, but it worked out well for us.
Yeah, I mean, good is a definition of paying residents or non-paying residents. There's no gray area. Unfortunately, that's the nature of the business. Obviously, we internally in our company we run a small charity where me and some of our friends we help with some deserving residents. We help them with connecting with other agencies in the city. But at the end of the day, we've got investors' liability, and rents needs to be paid. That's the only way to any investment or any investor to continue working with us. But this is a great, amazing story for what you mentioned. So 11 units, 12K all in a door. I've never heard of that. That's super awesome.
we did a 17 unit, and this is how, for your
Yeah.
listeners, you started off at 8, you do 11, then a 17, and the next one's a 16, and then the next one's 160. So
Right.
it's really a journey. It's not a destination.
Yeah. And then now for what do you do now? What kind of assets do you own? Do you have your own management? What are the things that you're doing now after, after those experiences?
So we got a few assets around town, around the United States, and
Mhm.
what we look for, and I hate to say this, is just a good deal,
Yeah.
a good deal in a great area, and that's really the key. If it's a great asset, I don't even care about the asset. I care about where it's at.
Hmm.
Right? If it's in a great location, then I'll give you a price for it. And like, trying to get the right number for the price is the key. We're in the process of selling that one I was telling you about, but now we've got a 168 unit, 300 unit, and we're buying this 64 unit in Oklahoma.
Uh-huh. Yeah.
Yeah, 10 years old, 2015, right? It's a light tech deal. What are you going to look at? You know what I mean? The building
Yeah.
permit was pulled and closed,
Yeah.
right? Everything's new. Everything's 10 years old. Roofs are 25 years old. That's your first thing to go, right? Your
Yeah.
parking lots are brand new, 10 years old. So we walked through it and looked at it and we're like, this is great. What I love about light tech, and I'm learning too. I'm not the head honcho on this stuff. I love to learn. I'm learning the difference between light tech and regular standard multifamily.
Got it.
Standard multifamily, we like to buy with around the 1% rule. So if it's $100,000 a door, we want the rents to be
Mhm.
around $1,000. But we were talking off camera about the live tech, the problems versus the multifamily. We're buying these for 51 a door, brand
Mhm.
new. I mean, help me understand what's wrong with it. How do you not do this?
You also did some bigger projects. What was your experience? What were the challenges that you went through? The 160 units you said, and I think 300 units. Where are they located? What was the partnership structure, and how did you come across executing it?
Bring them to me. People bring them to me now, and
Mhm.
I help bring investors and try and manage the properties. So you ever remember that movie Pulp Fiction when with John Travolta and Samuel L. Jackson? They
Yeah.
brought in the wolf.
Yeah.
They had a problem. They brought in the wolf. So in construction, I'm considered the wolf. When they go, hey, listen, this asset has a problem with the mold, or it's starting to cave in, the cement's starting to break. Like,
Mhm.
okay, well
Yeah.
then you got a foundation issue. Let's go look at that. And so I get pulled in on those, but I let the management team, you asked earlier, do we self-manage? No, we don't self-manage. I partner with somebody that self-manages his units. So he's got like 12 or 14 units all through the United States,
Yeah.
and I partner with him. And then I find somebody else. I like trying new things too, because we did student housing. That's pretty profitable.
Yeah.
I didn't really realize the profitability of it, but you're going, there's 104 doors, but it's 308 beds. You get paid by bed.
Yes. Yes.
You're getting, if you got 3 beds per unit, you're paying, we were getting $1,000. That's $3,000 a unit.
Absolutely. Yeah.
It's the more I learn, the more I love.
Yeah.
How's that? The more I learn, the more I love.
So you're currently working on a 60 units deal in Oklahoma.
Well, it's a real small one. It's only 54, maybe it's 54 units. I got to look at it,
Got it.
but it's
Yeah.
in Spencer, Oklahoma. Great place.
People come to you, you see more as an asset manager slash construction manager, and you help raise capital. It's your general partner who is responsible to do the work and take the right decision based on their experience, so that your investment as a passive investor or a sleeping partner or a limited partner, your investments are protected with the right decisions. Michael, your journey reminds me of what I always try to tell my team is like anything that you new start, you think of it as an entrepreneur in that field. You've got either 20 hours to learn that thing and execute it. And for that, you need a coach or a training program or some kind of video or a tutorial. And then there's another side of the being an entrepreneur is that you don't have none of that. And you go find all of that and try to be an entrepreneur, which is same as you're trying to go and run for a marathon without any training and you have no idea when it's going to end. So your journey is so fascinating. You started as a construction, you've gone through a couple of down cycles. And what I loved about your journey is that you never reached out more than what you can eat. I've seen a lot of people.
That's why I haven't lost. I
Yes,
lost $6,000 in my entire real estate career, and
correct,
that's why I haven't lost. Don't
correct.
put out more than you can chew. You
Yes.
can do that. And there's people that, the guy that lost $50 million made $50 million before that. I've never made $50 million. He said his net worth went up 17 million in 1 year.
Wow.
My assets have never went up 17 million in 1 year.
Yeah, but you did not lose it either.
I didn't lose a dime.
Yeah.
And choose your risk. If you're young, you can risk more. Me, I'm older. Listen, go with the safe, easy stuff. And that's just the way we
Yeah.
do it over at Investment Ventures. Do it easy, simple. Don't reinvent the wheel. Copy the people, copy the Warren Buffett's. Warren Buffett's favorite say, my when '08 happened, he had he met and he just talked to students for free, right? It was him and Bill Gates, and it was in '09. Everybody's like, "Hey, what's going on? Is America going to be solvent?" That was one of the questions. Is America going to be solving? It's going to turn into a third world country. And Warren Buffett just leans back. And I love how he talks too. He just simple and easy to understand. He just looks back and when the tide goes out, you'll find out who's naked.
Yeah, absolutely. Yeah, this is an amazing saying, and just on that, you just simply cannot go bet against the greatest economy in the world. You just can't. Right?
People do on a daily basis.
Yeah, and this is a top market right now where the reset of the pricing has been the highest so far, meaning the actual intent or actual effect of those pricing reset that we've seen right now. I bought a deal from a foreclosure, 143 units in February. The deal was the property multifamily here in Houston suburb, 25% occupied. It was an online auction we
Oh,
bought.
that's you just made me smile.
Yeah, and today we are at trending 73. These are the deals that we know that we're never gonna see it again, right? These are the deals that these like you saw they all in 12 a door. Businesses they never die from starvation; they die from overeating, right? Meaning you just took so many challenges and you never have an infrastructure. You never have the people in the place. Your story is definitely for somebody who want to do real estate, and it's easier said than done. But you and I both know most people will take those risks that they should not be taking. They will go stretch themselves that should not be stretching. 1989, when you had the first construction license.
Oh,
Okay. I mean, I don't know how you feel about it, but I think that was probably the best thing happened to you, I guess.
without a doubt. I'd be in the corporate world if I wasn't, if that guy didn't give me the greatest gift I've ever had in my life.
Yeah.
Uh, it was a weird situation. My brother was getting married on February 15th, Valentine's Day.
Yeah.
And the boss said, everybody's working, Valentine's Day. I said, no, I'm standing up for my brother's wedding. I mean, if there's no variance on this, he goes, like, I can't use you if you're not going to be on Valentine's Day. I go back, and I didn't want to quit because I wanted to get fired so I could go through the social security system and get unemployment, right? Because if you
Yeah.
get fired, you can go on unemployment.
Yeah.
Saw the line. I went back then. There was a line. You had to go get a line and sign up. I saw the line. I'm like, I'll have a job before I'm done with that. And then I fell into construction by accident, and then I loved it. I absolutely loved it. I started putting wood up in the houses. It was amazing.
And who's helping you with your business right now? What's your team look like? Who in your team right now?
So I don't have a big team under me. I have great partners,
Got it.
and God's blessed me with the best partners in the world,
Mhm.
right? And my son said when he was growing up, I brought him to work. You try to get your kids involved in it, and we were doing construction at the time. He goes, "I'll never do this. I'll never do this." And now he's doing it, and he's doing it on his own. We started the flipping company, and we started the multifamily company. He said, "I want to do it on my own." I'm saying, that's a proud father. When
Yeah.
your son comes up to you and says, "I want to do it on my own."
Yeah.
Yeah.
Awesome. Awesome.
And I don't have a big crew. I have a bunch of friends. I have a bunch of partners, and I find partners that are good at what they do, and then I
Yeah.
just let them do that.
Yeah.
And then I team them up with somebody else that's good at the other thing.
Yeah.
Complementary skill sets.
Awesome. I asked this question to myself and I asked this question to every of my guests. It's a fun question. It's not obviously it's overstretched, but the question is, if you lose everything today, God forbid, if you lose everything today, that includes everything that you love, how would you go back and rebuild in this age? How would you do that?
Today, so let's go 5 years from now or 5 years before. I would start a construction company when times are good and just build. Not because it's the best income, because I love doing it. I won an award in Detroit Home Magazine for one of our staircases. And today I would get everybody involved in syndication. You got to learn the secret to show people how to make money in multifamily. It's hard to explain to everybody else. Multifamily took the hit in the last 3 or 4 years, right? 3 or 4 years ago, the cap rate was 3%.
Yeah.
Right. And if you buy a multifamily at 3% and a $1 million property, it's like $100,000 NOI, you're talking about $3 million. But if you drop that to 6% or 7% cap rate,
yeah,
the price drops. Now it's 1.6 million.
Yeah.
And our cap rates right now are 7-8% that we're playing with, 6 to 8%. Right. So are we going to see that again? Just like you said, you can quote this and put this on the marquee of this podcast. When you buy might be more important than what you buy.
Absolutely.
You know when Grant Cardone got started?
I think it's 2008.
2015.
2015.
2015. And
No
what happened
kidding.
to multifamily since 2015? He got in at the right time, especially multifamily. Because what happened in 2015, the rates kept dropping and dropping and
Yeah.
dropping. And that's when he started buying. And he just, he had, dude, he got these and he was smart enough. Another gift from anybody listening. Never, 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 never buy flexible debt, an ARM or a bridge loan.
Absolutely. Yeah. Absolutely.
That's where people lose. You're
Yeah.
gambling at that point.
Yeah.
So what I like to do is if we're going to hold, we like to hold for 5 years. We like to double our money in 5 years and then get out.
Yeah.
Our mortgages are 7 to 10 years. And if anybody wants an ARM in that period, I'm like, don't want to work with you.
Yeah.
Why? I'll give you several case studies why people don't do that.
Yeah.
Right? It better be safe than sorry.
This is great advice, Michael. So you're saying if you have to start from zero, you will do what you love, which is construction, and you'll preach people to get into syndication. These are absolute two great things that anybody should be looking at to do right now if they're trying to get into real estate or starting their own business. To be honest, I mean that's one of the reasons why we as an entrepreneur try to touch real estate because real estate is relatively safer. And I say relatively meaning compared to what? Compared to stock market or any retail business or sales business, things of nature.
Let's crack that open a little bit. You made a statement, right? Real estate's one of the safest. Let's talk about what you buy.
Yeah.
So if you were to buy a house in 2008, was that a safe investment?
If I go back in 2008, I would probably be telling myself I'm taking too much risk. But today it was a hindsight best investment ever. Then you have to buy. Absolutely.
Now, what happened in multifamily though? 2008, 9, 10.
They get down in the value. People should be buying at the time.
They should have been buying in 2008 because then the interest rates started dropping and then the cap rates start compressing. So if you buy it at an 8 and sell it at a 3, what did it get down? It got down to 3% in 2008 and 9, right? 9 and 10 actually. That's when
So
it
I think
dropped the most.
the lowest interest rate. So I bought my first 138 units, first 40 units in 2014. Today we own about 3,300 apartment units between Texas and Arizona. And you're absolutely right. I made a content piece not too long ago. People say that you cannot time market to make money. Sure, but is it really true? Right?
Oh,
If
you
you
can.
if you buy in a high time and selling in a low time, every asset class, every business has its own cycle. Even if you were
That's my
going to the
point.
airline market, or even if you try to buy a business in a bottle market or bottle manufacturing or cleaning business, every business have their own cycle. What people are telling you, oh, you cannot time market to make money. Well, those are financial advisors. They want your money to be invested so that they can make the fee on top, and that's that's not how true business owners do it. These are brokers. You don't want to deal with the brokers. If you time the timing of the market is so extremely important to a point that I bought a property. We won an auction of that 143 units in a market that I would never buy in a regular day. But the price just was not able to let me go to sleep without taking an action. So that's the reason why we bought. Michael, one last question. What would somebody who's listening to you wanting to come into construction, wanting to come into real estate, wanting to come into syndication, what is the couple of advices you can give to our audience?
That's good. That's a good question. What advice would I give a newbie what would I give myself 20, 30, 40 years ago? I would say get a mentor to show you how to do it. Somebody that's at where you want to be.
Yes,
And then when you get there, you're going to find another mentor higher than him, right?
absolutely.
And fear not. Fear cripples most people, cripples investors, but it fuels entrepreneurs.
Yes, absolutely.
When someone says I can't do it, I typically will do that.
Yeah, yeah. If you say you can do it, you may be right. If you say you can do it, you may be also right.
You are right. You are.
Yeah.
Whatever you say you can do, you're right. Whatever you say
Yeah.
you can't do, you're right. What has to change for those to change?
Yeah, going back to your example about the sharpest guy had a 90% R rate versus the 50%. You do this project management on a steroid to get that.
In 5 days, we
Right.
flipped it in 5 days, right?
Yeah.
And I was going to say I'm wrong. It would have been 6 days. We flipped the unit in 6 days. I was right on the 5 days because I think they felt my confidence,
Yeah.
and then they run with it.
Yeah.
So
It's a leadership.
there's quantum physics show that us observing something changes it.
Yeah.
The double slit experiment changes when someone's looking at it versus someone's not looking at it.
Correct.
Whatever you say is true.
Yeah.
I can do this.
Yeah.
I can do that. When someone tells me I can't do something, I get excited. I'm like, all right,
Yeah.
you can't win the US Open. I disagree with that. I got 13 of those right now. You can't break a world record. Nah, I got a couple of those too. You can't build a house in 6 days. Nah, I did that. And my mom said she was making lunches for me and going out to construction. I said, I'm going to build a garage for somebody. She goes, on your own? I go, yeah. She goes, you don't know how to do that. I go, where do you think I've been going for the last 2 years? Learning this. I had some great mentors along the way. People that showed me how to build, showed me how to invest, showed me how to do everything that I'm doing. I highly suggest get an investor, get a mentor, which you want them to do, and enjoy it. The one
Mm,
thing I didn't do was I stressed more than I should have. And at my age, I know now that stress is just stealing your joy.
absolutely true. That's something I'm definitely going to remind myself over and over again. Michael, thanks a lot for sharing what you shared. How can somebody get in touch with you in if they want to know more about what you're working on right now, your LIHTC deal, how can they get in touch with you?
So, Mike at AI Ventures LLC or American Craftsman Homes in South Carolina. I'm starting to like the flex space. That's another one where it's almost multifamily and it's almost, it's almost too easy. But AIV Mike, the email is Mike at AI Ventures LLC, and hit me up. I'm on social media. You can find me over at Mike Senior. I'm the old guy. My son's killing it too. So don't call me up and say, "Hey, this is Mike and Mike Senior." My son will go, "No."
Awesome. Mike, thanks a lot for your time. I thoroughly enjoyed the experience and definitely got some great insight, to be honest. Thanks for sharing your background and your story.
Thank you. Appreciate your time. I appreciate your podcast. You're killing it.